Okay. And John, what challenges did your clients face in managing data?
Yeah, I just want to pick up on something Joanne said, which I think is really interesting. It's certainly a theme for our customers or the people that we're interacting, and that is the notion of interpreting regulatory requirements. You know, the regulatory requirements are not as simple as following a recipe, a step-by-step recipe. It is open to interpretation. So that's probably the first main challenge, is getting crystal clear in your mind what exactly the regulator does and doesn't want to see from an institution. And against that lens, of course, I think the larger problem or the larger challenge for our financial institutions and regulated businesses is that the underlying technology that much of the industry uses is not new. And more often than not, a collection of dozens, if not hundreds of individual systems that have been hobbled together to form an institution. And they don't do a very good job of talking to each other very well, and they certainly make it difficult for financial institutions to get a single view of all of their transaction level data. And when you don't have a single view of all of your transaction level data, reporting, running analytics, running machine learning, running AI across it, if the base level information is fragmented and exists in silos in different message formats, it can be very, very challenging to manage the data.
Mm-hmm. And does your company have any solutions to help your clients in this process?
Yeah, look, it's the very reason identity exists. Identity exists to solve the problem that sort of this growing gap between the expectations of regulators and customers, as I said in the opening, to see more granular level of information at a transaction level, and the fact that the underlying technology just can't do it. And there has to be a way for financial institutions to be able to meet the demands of regulators and customers without having to expose themselves to costly and risky significant change projects to replace the underlying core technology.
Okay. And Joan, do you have something similar that helps your clients?
Yeah, so we provide a regulatory reporting solution, advisor reporting center for banking and insurance in Singapore and Australia. So essentially what we do is, again, maybe pointing to that level of interpretation and implementation that banks have to do today. We deliver the regulatory data models and rules directly from the regulator. And that means that having that kind of synchronization with the regulator system means that the cost of change is cheaper. It's faster when the regulator makes some changes, and also it just means that similar to what John mentioned there, we're not looking at having to drastically replace what's already there. We sit alongside existing data warehouse or existing regulatory reporting solutions that might have already been in place, and just provide that extra level of pre-validation and sort of guaranteed right first time data for the regulator.
Sure. Catherine, you work with financial institutions a lot as well, so I'm sure you hear a lot of these issues around data.
Yeah, certainly.
Would you share with us?
Yeah, I think the process of reg reporting has always been a pertinent problem for banks globally. As John mentioned, significant amount of time is going to be needed to interpret the regulation, trying to comprehend and interpret what the principle-based kind of regulations, for example, and then trying to source for the correct data within the whole spaghetti of diverse and complex IT landscapes, right? This will be especially difficult for global banks with operations in multiple jurisdictions with different standards to comply locally, whilst trying to drive standardization globally across the group as well.
Okay. So I think before we move on to the next question on system implementation challenges, we'll take a few minutes to do a quick poll. Okay, so I'm just going to read the poll right now. Are you undertaking a change program to improve your reporting systems and processes? Yes. Doing this now? Yes. Kicking off in the next 12 months? Yes, but no time frame. No, we have no plans. So we'll wait for a few minutes for the result. I think it'll be interesting to see what comes out of this, because I think this is kind of related to the next questions that we are looking at, which is on system implementation challenges. Just 1 minute. Sorry, this is so I'm just going to. Okay, so I think we probably have to move on to the next question now. I'm really not very good with technology, but please bear with me. So we're trying to show the poll result in a few minutes, but just conscious of time, I think we have to quickly move on to the next questions, which is about implementation challenges. So where are financial institutions now in terms of implementing system change to deal with the new regulatory reporting requirements, and what would you recommend as best practices for implementing change and managing data? So I'm going to pose that question to you first, Joanne.
Sure. Yeah. I mean, I think what we see is, generally any change that comes along, especially a big reporting requirement change like we had with MES 610 in Singapore or EFS in Australia, they tend to be big projects. So we're talking about, so the projects can go on for a year, maybe 2 years, quite a large cost to each financial institution. I don't know how much has been discovered really about where that cost lies in Asia, but I know in the UK, for example, the FCA had done a survey on reporting costs for mortgage data, and they found that about 15% of the cost was interpretation, 30% in preparation of the data, 40% in production of the reports, and then the final 15% in sort of communication and queries with the regulator. So you see that sort of 70% of the cost is still there in that kind of preparation and production of the data, going back to some of those challenges we spoke about with legacy systems and sourcing data. So I think the cost of change is still very high. What could maybe the industry do a little bit better in terms of managing data? I think there's probably a couple of things. From a regulator point of view, I think what we're seeing is a trend amongst regulators to collect more granular data, as we mentioned. Also a trend towards digital reporting, which we're going to talk about at the end. And ideally having more data standards and more clearly defined definitions of data that's required from each bank. Banks themselves, then I would say, probably need to focus more on their own data governance and management first, more broadly, not just in the context of regulatory reporting, and maybe stop looking at implementing solutions for each reporting requirement. So trying to get a solution that's going to be future-proof, that's going to not just deal with the reporting requirements that are there today, but considering the way that regulatory reporting is going to go into this more granular data, maybe use of APIs, machine to machine, etc. So trying to keep that in mind and not just looking at a sort of tactical solution for the current challenge that they have. So making that probably bigger investment, I would say, in data governance and management.
Mm-hmm. Okay. Thank you, Joanne. Catherine?
Yeah, so I think BCBS 239 has been recognized as the de facto gold standard for good data management principles. We've had a lot of conversations with banks and regulators in the region around this particular regulation. And whilst only in Singapore we rolled it out, but others such as the BSP in Philippines have actually incorporated some of these principles into their local circulars as well. So interesting fact about the BCBS 239 is the regulation was issued back in 2013. And the last progress paper that was just released in April by the BIS showed that only 10 out of 34 globally systematically important banks are fully compliant to that regulation in 2020. That is a good 7 years journey, and only 1/3 of them are fully compliant. Legacy systems and other IT challenges has always been the toughest hurdle for any of the banks to comply with, Principle 2. And that's also echoing what John said earlier about IT and the technology part being toughest. And riding on what Joanne said about sustainable change, for it to stick, we really have to focus on developing that strong foundational capability within the organization, not to just focus on achieving compliance per regulation in silo, but look at how you can really establish and leverage that sort of existing standards as a BAU capability within the bank that you then expand across as you increase in scope coverage. And the fact that MAS has enshrined data reusability in its data collection approach makes more sense, right, for the banks to ensure good data quality within your authorized sources, and then ensure that the authorized sources are indeed used consistently across different departments for various reports as and when necessary.
And John, your view on best practices?
Sure. Look, I would agree from a best practice perspective with what both Catherine and Joanne have said. And I would add that, 2020 has been an incredible year for all of us. And I think COVID-19 has probably accelerated opportunities for RegTech businesses as financial institutions are having to do more with less. They are, of course, resource constrained as they have to channel resources, or they're having to channel resources to other areas of the institution to cope with the pandemic. And therefore are having to find more nimble and cost-effective ways to respond to regulators who, by and large, aren't changing regulatory frameworks as a function of the pandemic. So I think there's this unique opportunity for RegTech businesses this year to position themselves as I said, faster and more nimble ways to help financial institutions solve underlying regulatory problems caused by legacy technology.
Yeah, just an extra point in that. I think what we're seeing a little bit as well is something John mentioned is that kind of interoperability between systems is really important. And banks don't want to end up with 25 different RegTech systems, each doing little bits of their compliance and reporting. So I think that's another trend that we see where RegTechs themselves have realised they need to be interoperable. They need to be they need to have APIs or ways of connecting to multiple systems, which is quite important as well.
Okay, I think we might have a bit of time here, so I'm just going to ask a very quick question about the use of AI, given that AI is such a buzzword these days. So what role does AI play in helping banks meet regulatory reporting requirements? Does anyone have a view? Joanne, Catherine, or John?
Yeah, I mean, I've seen a couple of examples. I mean, obviously, AI is quite widely used. I think, again, probably focusing more on this side of the world. In the UK, there was a survey done, and about 80% of the respondents of financial institutions said they were using AI or ML within their business. Now, not particularly on regulatory reporting, but maybe chatbots, etc. But for regulatory reporting, where I've seen AI being used quite successfully is in keeping up to date with regulatory requirements. So AI that is doing text mining, for example, on regulatory websites or publications, and making firms aware of maybe some policy changes that might be coming. So it can even scan, for example, a speech from a central bank, governor of a central bank, and give some insights into maybe policy changes that may be coming down the road, which is quite useful. There is maybe a growing trend towards maybe wanting to use AI in the actual data sourcing and preparation. I think for that to happen, you really need to have those data standards well defined first from the regulator. So having machine readable data models that are written in a common domain model or a common language that machines can understand would help towards that. There has been some proof of concepts that have shown some promise in that space. But I think we're probably a little bit away from a machine being able to go into everybody's source systems and pull the data magically and deliver to a regulator. So probably for now it will be sort of supervised machine learning or supervised AI combination of humans and machines for quite a while yet.
Okay. Does Catherine have a view?
Oh, I think Joanne summarized it beautifully. Yeah.
Okay, great. And John, anything to add to that?
Sure, why not? I would just preface it by saying we're not an AI company. However, there are a couple of trends, and just to continue on with what Joanne has already covered, there's a significant opportunity for AI and RPA as well to be able to analyze unstructured data. And I think that's at the very core of the issue that we're talking about today, the fact that the industry is prevalent with this unstructured data. And then also the ability to draw on AI to format and submit reporting. I think these are some key opportunities in this space moving forward.
Okay. Okay, so we're going to move on probably to the last question for this session. It looks like there is something going on digital reporting, starting with the UK regulator. We understand that the UK regulator is looking to introduce digital reporting. So what exactly is involved in digital reporting, and where are they now in this initiative? And do we expect something similar in Asia? Well, Joanne, you are very close to, you are in Europe. Perhaps you could tell us where the UK regulators are now in terms of this particular digital reporting initiative.
Yeah. Sure. Yes. So digital reporting, it sort of came out of a tech sprint in the FCA in the UK in about 2017. And what they were looking at originally was, I guess, the end-to-end process of regulation. So looking at, from the beginning, from when a piece of legislation or reporting requirements are drafted, or reporting guidelines are drafted, how could you tag those in a machine-readable way, so that when it came to interpreting what was required, it would be a lot easier to do and a lot more automatable, basically. So they looked at it from, I guess, the full end-to-end process, starting with, how do we tag natural language and make it more consumable by machines, and then also looking at a common data model that could be used as well. So there was a common domain model, CDM, that was used for derivatives that they used in a proof of concept originally. Where they are now, they've come through phase 2. I think phase 2 viability report was released in January this year. And there's still exploration going on. There's still POCs going on, and they're really assessing now the technology that could be used for this. But I think it's a very wide. When you talk about digital reporting, what does it mean? It means different things to different people. So you could look at it from the whole end to end. Are we going to get to a point where we have lawyers, for example, drafting legal text and automatically tagging them with some machine readable tags? I think we're a little bit away from that probably today. But when you get to the point where you have a data model and a common domain model, can we move into having data pull and APIs, maybe pulling data and doing things in a more digital way? Yes, and we're already doing that today. For example, in Africa, we work with the Bank of Ghana, and they've got a granular loan level data collection. So it's collecting the full loan book from each bank via API, and that's ongoing at the moment. So I think digital reporting, for me, the technology is here. I don't think it's a technology challenge. I think we can look at APIs. We can look at blockchain in some situations, maybe for certain types of data may be suitable. And where the initiative's going is definitely towards granular data and more automation. But whether we get to that full, that full sort of nirvana vision, I think, of digital reporting will probably take quite a bit longer, because I think the agreement of standards with the industry and making that something that's not just useful in one jurisdiction, but as Catherine mentioned, for global banks having to deal with regulators in multiple jurisdictions. It would be great to have a single definition of what a loan is, for example, but it's not the same. So I think getting to that point will take a little bit longer, but we'll definitely only get there with going more granular and increasing the use of technology over time.
Okay, thank you, Catherine. Do you do you have any insights on what MAS is doing on the digital reporting front?
Yeah, sure. I think just in April this year, right, the G20 Tech Sprint was kicked off, and it's actually a joint initiative with the BIS's Innovation Hub and the Saudi G20 presidency. MAS and the Saudi Arabian Monetary Authority are also part of it, together with the FSB. And basically, they issued 3 problem statements, trying to look for innovative technologies to help resolve all these RegTech and SupTech kind of problem statements. And one of the 3 problem statements published was specifically on regulatory reporting, looking for solutions that can leverage on harmonized data requirements, talking about the legal entity identifier or even the unique product identifiers, leveraging on all these sort of industry standards that are shared by multiple parties, and also potentially the development of a common code repository financial institutions to push and pull regulatory reports or data via authorized APIs. So riding on what Joanne just said, I think the technology is going to be here. The technology is already here, sorry, but it's more of the challenge will actually be the collaboration that will be required between the regulators and the industry in order to make this a reality. Because the technology is smart, but fundamentally you need some form of standardization, right, across multiple different parties and entities. And there's going to be a lot of domain subject matter expertise that will be required from the practitioners within the FIs to align on interpretation across the industry for any common standards to be adopted in a pragmatic and a sustainable manner as well. I think just to quickly just touch on the HKMA in Hong Kong, they are also conducting a deep dive study on the needs for or possibilities of machine readable regulations for selected reg requirements. And so that is also something that's being explored around across multiple regulators. So it's going to be very exciting to see how this shapes up.
Mm-hmm. And John, I guess you follow digital reporting as well. Could you give us your view on digital reporting? What you are seeing in Australia and probably around the region.
Sure. Look, again, I agree with Joanne and Catherine. The technology is certainly already here, but the raw materials to be fed into the technology are a long way from ready. Of course, one of the challenges that we have both structured and unstructured data that needs to be identified, collected, verified, and securely shared. And that's not as easy as getting it from reality to a proper digital reporting solution in whatever format that takes. It'll be a big undertaking. We can't just adopt machine-readable approach. That only works for certain data types. And I agree that AI can and probably will help, but that also has its limitations if it can't first figure out how to normalize data sets. And even then, it won't be that helpful until we know for certain that we have all the data in the first place. It's going to need to be regulatory driven, but with a significant amount of input from the industry as to what is and isn't possible.
Mm-hmm. Okay, well, thanks very much, everyone. So before we close this session, we would like to run one final poll. We have heard from our panelists the various challenges banks face in regulatory reporting. It'd be interesting to hear from the audience the areas they would like regulators to focus on to reduce their regulatory reporting burden. So I'm just going to read this question here. Which of the following areas should regulators focus on to reduce your regulatory reporting burden? Modernization of the data collection, technical architecture, for example, machine-to-machine submissions, APIs, data pool, provide common data models, for example, follow operational standards, more granular data, digitalize reporting instructions, such as make it machine readable and replacing PDFs with code. Yeah, so I think we'll wait for a few minutes for the poll result to be released.
I think we got the results of the previous poll just put up there as well. So that was quite interesting. We had we had 15% said yes, they were kicking in or starting in the next 12 months. 23% had yes, but with no time frame as yet, and 25% no, said no, they had no plans at the moment to look at changing their reporting. So that's about it.
Do you have anything to add to that, John and Joanne?
No, nothing that we haven't
based on
already
the poll results.
Yeah, I mean, I guess it's what we would typically see is maybe back to the point about people tend to scramble around looking at changing their regulatory reporting solutions when there's a big new requirement. I guess what you'd like to see is probably a bit more focus on, as Catherine has mentioned as well, a bit more focus on sort of the core principles and getting that in place first before you make a massive change to your regulatory reporting solutions.
I think I would speak for the banks who are present on this call by saying that if the regulators were to help with a little regulatory push, that would really help them to secure some budget, especially in these sort of tough times right now. Yeah, where everyone's fighting for budget allocations. Yeah,
that's true.
John, is there anything that you would like to add?
Yeah, look, there's there's nothing like the threat from a regulator to draw out budget from an institution. We're seeing that. We're seeing that in some very high-profile cases here in Australia at the moment. I come back to what I said before. The data, also the technology, does exist, but it's going to require a regulatory-led, particularly in a regulatory-led approach to make sure the technology is adopted. I think the final thing from us is certainly from AUSTRAC. The feedback that we're hearing from our local regulator in this part of the world is that the quantity of data that they receive is significant. The quality of data they receive is not, and that there is a looming opportunity for institutions to take hold of them.
Right. Okay. So looks like we are running out of time. So I'm just going to quickly wrap up this session. So we have talked about the changing regulatory requirements as a result of the virus pandemic, and we have also looked at the challenges financial institutions faced in data management and the challenges brought about by system implementation. We have also heard our experts give their views on how the use of AI has helped banks in their reporting tasks. And finally, we are seeing digital reporting as an upcoming trend, and regulators in this part of the world could make it a requirement. But there will be challenges that come with digital reporting, and regulators may need to first agree on the definition of digital reporting. So I think we have probably only started to scratch the surface, but feel free to connect with us if you have questions, and we'll do our best to get back to you. I'd like to thank our panelists today, Catherine Lee, Joanne Hogan, and John Raymond, for the time and comments. Thank you all for being here. Thank you.
Thanks for having us.
Thank you.
Thank you. I think the poll results might have been ready, but I'm not sure how we can share those.
Okay. Yeah, I think the poll result is out, but
maybe the technology is letting us down again. Okay. Well, thank you very much, everybody.
Yeah,
and apologies for my technical difficulties at the beginning.
Thanks so much. Okay, they will share the result in the stage chat. Thanks very much, everyone. Thank you. Bye-bye.
Hello, hello, and good afternoon.
Hi, good afternoon.
Hello. Good afternoon. Welcome to everyone that's joining us for the final session of day one of RegTech Asia 2020. And we're going to finish the day with a discussion on digital banks in Asia and focus a little on how these banks intend to use technology, including RegTech, to provide superior services to their customers. Now, some would argue that the arrival of digital banks in Asia is the single most important development in the industry for many years and has the potential to transform financial services. And we now have digital banks that have launched or are in the process of launching in Hong Kong, Korea, Taiwan, Singapore, Malaysia, to name only a few countries. But we're in the midst of a public health crisis. Is now the right time to be launching a new bank? Will the new digital banks really be any different from the incumbent banks? Yeah, and what are the pitfalls of using new technology in digital banking? To help us discuss some of these questions, we have a fantastic panel with us this afternoon that represents a broad array of experience in this space. My name's Jamie, and I'll be your moderator for this session. I'm a writer for Regulation Asia and an independent consultant, and formerly a regulator and a banker. But before I introduce the panel, I'd just like to make one point of clarification that could cause confusion. There are specific nuances attached to these terms that we use, whether it be digital bank or virtual bank or neobank or online bank. But to avoid confusion, I'd suggest that for this discussion, we'll use the terms generically and fairly interchangeably. So I apologize in advance to those who have a more precise lexicon than me. But without further ado, it's my privilege to introduce the panel members. I think we have all 4 panel members with us online. The first panelist I'd like to introduce is Adrian C. Adrian is the CEO at WeLab Bank, which is the only homegrown standalone company to win a virtual bank license from the HKMA. WeLab recently launched its virtual banking services in Hong Kong, and I think that was less than 2 months ago. So it's one of the youngest banks probably in the whole world at the moment. Prior to WeLab, Adrian spent a number of years at financial institutions, including Standard Chartered, Prudential, and ANZ Bank. Welcome, Adrian. Delighted to have you with us today. The next panelist is Debbie Mann. Debbie is Chief Compliance Officer and Head of Legal and Compliance at Ping An One Connect Bank in Hong Kong, which was also awarded a license by the HKMA last year and is currently operating in the Sandbox. Debbie has over 20 years of regulatory and compliance experience in the Hong Kong financial industry, including roles at the HKMA, JP Morgan, ABN AMRO, and BNP Paribas. Welcome, Debbie.
Hello, everyone.
The next panelist I'd like to introduce is Sheena Shao, leads the Regulatory Change Competence Center for Virtual Banking at Synpulse and is based in Singapore. She's a risk compliance and data analytics professional with over 8 years of banking and consulting experience in Singapore and Hong Kong. Sheena's expertise includes risk management, regulatory reporting, data analytics and modeling, and data governance, having worked at various roles in Credit Suisse, KPMG, and Ant Financial before joining Synpulse. Great to have you with us, Sheena.
Yep. Hi, everyone.
And last but certainly not least, I'd like to introduce Matthew Fields, who may be well known to some of you. He's the Asia Pacific Market Director for Anti-Money Laundering at Nice Actimize. And Matthew works with financial institutions, regional regulators, and industry analysts to address AML challenges throughout the region. He has 28 years of experience in regulatory compliance, risk management, business consulting, and technology solutions. Great to have you with us, Matthew.
Pleasure to be here. Hopefully you can hear me properly.
Yes, loud and clear.
Great.
Adrian, I'm not sure if we can hear you if you were speaking into the mic then. I think we may have a problem hearing Adrian. Hello, Adrian, can you raise your hand if you can hear me? Yeah, okay, but we can't hear you, unfortunately. Well, we'll get started, and hopefully somebody can help with the audio. Is that okay? Great. So I'd like to start, by taking stock of the current situation. For the last 6 months, the whole world has been in the grip of a public health crisis. There's been lockdowns and circuit breakers and social distancing. So the question for the panel that I wanted to start with is, how is this pandemic affecting the launch and rollout of digital banks in Asia? I think while Adrian is perhaps fixing the audio, maybe we could start with you, Sheena.
Yep, sure, Jamie.
Yeah.
Good afternoon, everyone. I'm really glad to be here today to share my view on the virtual banking topic. As a consultant, I have the privilege to support various virtual banks in Hong Kong through the journey from license application to banking setup, and now digital bank applicants in Singapore. The COVID-19 pandemic has certainly affected the launch of digital banks in Asia. And specifically, I would like to share my input on how it impacted the customers, the regulators, as well as the digital bank applicants. From customers' perspective, we are seeing changes in behavior and preference. Customers are becoming more receptive to the idea of digital banking. And on the regulator front, the MAS has reacted to the outbreak by postponing the decision of the successful applicants to the second half of this year. And moving on to digital bank applicants, we see that the delay of the MAS decision certainly provides more time for the applicants to think through their strategies and client value propositions and get ready, potentially their proof of concept. This pandemic presents both a challenge as well as an opportunity. Given the potential lasting economic impact of this pandemic, the applicants will need to consider in their business strategy the appetite of their customers for different banking products, especially when it comes to credit products, and the risk that comes along with it, and also ramp up the necessary infrastructure to serve the needs of the customers, and also put in place the risk management framework to effectively manage and mitigate that risk. Yeah, that's my view here.
Great, thank you, Sheena. I'm not sure if Adrian is back with us yet in terms of audio. Doesn't sound like
maybe we can let him have more time. I'm
yes,
happy
Debbie,
to go ahead
Debbie,
first.
Wonderful, yeah. Debbie, what is your view? You are in the sandbox, I understand, at the moment in Hong Kong, and how has the pandemic affected your Ping An One Connect's journey to their launch in Hong Kong?
Thank you, Jamie. I'm very happy to have joined Ping An One Connect, and very excited we are in the sandbox stage during test public launch. Now, at the start of the year, I remember people were quite worried about efficiency loss because we have to arrange working from home, or some business meetings have to be cancelled. But Hong Kong people are very adaptable, and people very easily and very quickly are very used to the online environment. And so surprisingly, I don't see there's a big delay. There might be small delays initially, but you can see virtual banks are gradually rolling out their businesses. And the concept of virtual banks remain maybe new to some segment within the city, but with the pandemic, at some point, I agree with Sheena, it helps people to be more comfortable with online environment. And for internet banking, maybe it's many people in Hong Kong have the experience using that, but not for remote onboarding. In the pandemic environment, when people are more used to the online environment, so people are more used to it, they have more courage to go for remote onboarding. Now, it's good that we can benefit from an unfortunate environment.
So I see we may have Adrian's not back yet, right? Okay. So that's my thinking about the first question.
Sure. So generally, it's been neutral or even positive in some aspects that people have been online a lot more perhaps and have been looking at their finances perhaps and opportunities to open new accounts. Matthew, would you agree with that? I know you talked to a number of clients in Asia.
I would not only talk to them. We're privileged that we're working with a number of digital banks in terms of the rollout of the digital banking environment from a financial crime protection perspective. And one thing I will say that the clients that we have worked with have slowed down a little bit in terms of their plans for deployment, including the types of products that they are thinking of issuing to the customers, and therefore that impacts us because we're obviously building detection models and rolling out detection models to protect the banks against that. But again, saying that though, we're also working with a number of license applicants, and obviously in Singapore there's been a bit of a delay, and that's some frustration there. But I don't see them actually slowing down in terms, they're building up all the information they need to get that license. They're using firms like ourselves to actually convince the regulators that they've got all the right things in place, and I see that's going on. But of course, the frustrations are some of the regulators around the region are a little slowed down a little bit in terms of issuing those licenses.
Yes, understood. Thanks, Matthew. I think Adrian's coming in and out. There's a little bit of background noise which has gone. Thank you for that. I mean, on the whole, taken as a whole, it seems as if the project is still moving forward. There are some positives from the pandemic situation that we're all in, but we know from elsewhere, outside of Asia, perhaps, that other digital banks are facing other challenges, and having a digital bank license is no guarantee for success. So, for example, we know of a UK bank that's had to raise capital at a deeply discounted valuation from its last round. There's a bank in Australia which has shelved IPO plans and product launches. Some of these challenges were there before the pandemic, and some might be second order or second derivative challenges. What do you see as a panel in terms of the current challenges for digital banks going forward after the whole rollout process is completed? Maybe Sheena, if you could start off for us. Yeah.
I was on mute. Yeah, sure, Jamie. Apart from the pandemic, I see talent constraint as another challenge that digital bank applicants might potentially face. I recall when the virtual bank license were granted in Hong Kong, there was quite a spike in demand for talents, and we saw movement of resources from the incumbent banks, from regulator, consulting firms to these new virtual banks. It's not always easy to incentivize talents to leave their comfortable positions in a big organization to join a new startup virtual bank. And that was before the pandemic. Given the pandemic and the current job market uncertainty, people are likely less willing to take the risk and move around. So that's where I see, potentially that might be the challenge for Singapore digital banks. And I see the importance of consultants filling in the gap here and supporting the smooth transition where ultimately virtual bank resources are onboarded. So that's on the talent constraint side. And as Jamie mentioned, potentially the second order impacts of pandemic. I think it's quite clear, at this point of time, the impact of COVID-19, what we can see, the looming economic uncertainty, the job losses, tightening of liquidity, put tremendous pressure on banks, credit or liquidity risk management. Consumers and business demands for new credit it's likely going to be stay high. At the same time, we're also seeing increase in loan delinquencies or impairments, etc. So during this stage of time, I think virtual banks really have to be cautious. But at the same time, too conservative an approach could result in the loss of business to potentially other lenders. So in my view, aside from developing their go-to-market strategies, banks will really need to assess whether their risk models, their policy procedures, their current stress testing methodologies are actually adequately capturing the short-term, medium-term, or long-term risk to help them get through this particular pandemic. That's my view here. Thanks.
Thank you, Sheena. Debbie, would you agree? What is your view?
Yeah, sure. I agree with Shuna on that during the pandemic. Maybe it's possible some candidates would be hesitant or more conservative before they decide to join an exciting career opportunities. So in some aspect, we're fighting for talents, and that's not easy. But on the other hand, as we said previously in the first question, people are more used to the online environment, and even I previously won't visit museum online, or I won't have visited galleries online, but this is the new normal. People are willing to try online experience in multiple scenarios, including remote onboarding and online banking. Now, I can also see because people are less willing to visit physical branch, and the opening hours of physical branch of traditional banks also shortened. It's possible traditional banks are trying to catch up to roll out their mobile and fintech solutions as well, meaning there may be more competition for virtual banks. And Ping An Wenken, for us, our value proposition is not only to serve retail individuals, we also serve the SME community. So in this pandemic situation, they may be facing difficulties for timely and dynamic banking services, even though with more competition, but there's also an improvement of understanding and more awareness of mobile solutions. So I guess there are pros and cons as well. And the outcome would be the SME with more service providers trying to compete for better services, they will be better served. And that's my opinion. Thank you.
Thank you, Debbie. Massey, do you have anything to add?
Yeah, I do. Look, I'm looking at this from a compliance and financial crime prevention perspective, because once you go live, believe me, digital banks are seen as an easy target for both money launderers and for fraudsters. Okay, so I think it's there. And why is that? I think it's because of the new, I guess, digital channels that you interact with the digital bank is different from a traditional bank. We're looking at mobile devices accessing these digital banks a lot more frequently than they would, for example, a traditional bank. And when you kind of look at the figures, I think there's a figure out there that that 60% of digital bank transactions are actually executed by mobile devices. That figure could even probably was more during the COVID, during the peak of the COVID situation. Okay, and then if you look at the situation where digital devices, there are more digital devices such as mobile phones than there are population on this earth. Okay, so you've got this whole new way of interacting and deceiving the bank in terms of perpetrating financial crime. Okay, so that's one of the things that I think the banks have to, once they go live, always worry about: are they being protected properly? Am I governing that program of protection properly? And if I am doing all of that, is it actually empowering the bank to actually get more clients onboarded because I've got such a good framework in which a compliance framework that isn't restricting the access of new customers to that particular bank? So that's where we look at that. And, if I look at the new scenarios that we've seen around, even on anti-money laundering, mobile phone account takeovers, ATOs, as they call them, new account frauds, where fraudsters have basically opened accounts, stolen accounts, and opened them and got mortgages out of digital banks, student loans, car loans, credit cards, etc., etc. So there's a lot going on. A lot needs to be protected, and and that situation has I think got a little bit more in focus since COVID came along.
Right. That's really interesting, Matthew, because I think the conventional wisdom is that technology is a competitive advantage for the new digital banks. And there's a presumption, I think, that digital banks are adopting new technology with speed and pervasiveness that the incumbent banks have not been able to do. And yet you are perhaps sounding a note of caution there that actually, if it's not done right, there's a risk. Digital banks can pose a new risk for the system. Do you agree, Debbie? Would you say that that's a legitimate note of caution? And how do you see this question of technology, digital banks, their posture with regards to embracing and adopting new technology versus the traditional banks? And I think that the question that is interrelated or linked to this question in a big way is, do the new digital banks adopt third-party technology and build third-party technology into their systems, or do they build it in-house? And so maybe I could get your views on those subjects, if you don't mind. Thank you.
Yeah, sure, no problem. Before I joined Virtual Bank, I worked for a few international banks before, and in one of the international banks I worked for, they have hired hundreds of data scientists, and some are in the regional office and some in the head office. So for traditional banks, they may have an advantage of being very resourceful with the economy of scale, but quite likely the legacy of computer systems or data quality issues, because they have their clients over the years, might be a problem to enable them to have consistent and efficient data analytics, but they're catching up quickly. Whereas for virtual banks, we start from the scratch. We have the advantage of being able to think from the current situation and think about the architecture and have start to build really good data quality. To your question on whether third-party solutions versus tailor-made in-house solutions should be used, there are different considerations, but ultimately the key is really what would be the best solution for the bank in serving clients. That's the key question. For third-party solutions, we always need to be very careful about the quality and reputation of the service providers, and have due diligence, and not just from the start, need to be ongoing as well. And question on whether if we need them, if there are incidents or if there are emergency situation, would they be around to answer our questions? Do they also outsource to other service providers? And do we know them well enough? Do we have control over their service offering? So these are considerations very important before we decide to use third-party solutions. But of course, they also offer great advantages of being standardized. They are close to market. We can leverage on their industry experience as well. And clearly, for using in-house system, we can have a tailor-made services to tailor our needs. We can have very close dialogues with possibly the developers, and also there can maybe more synergy. But of course, there's always a question. There may be more time required and more staff and effort to the in-house solutions that will cost. So those are important points. But I believe virtual banks will usually think about different options.
Yes, thanks, Debbie. I think you raised some interesting points there. There was an earlier panel this afternoon which talked a little bit about those risks of outsourcing, and I've heard the term fourth party being used at sometimes when you're using a third party, working with a third party, but do you know who's their third party is that they might be working with, and might be that fourth party might have access to data. And then I think linked to that question is data localization, which doesn't apply to every country, but in Asia there are some countries which require data to be onshore and kept onshore. Sheena, do you have any views on what Debbie said? Do you agree or disagree, or have any other thoughts?
With regards to this question, actually, I agree with quite a number of the points that Debbie has raised just earlier on. If looking at technology red tag adoption, right, from identity verification, eKYC, or the ongoing customer due diligence, and even AML transaction monitoring or red reporting, we can see red tag is ubiquitous in a virtual bank. In terms of the speed of adoption, virtual bank, as Debbie mentioned, start from scratch. It has a big advantage in red tag adoption, given that there's no baggage, there's no legacy system that incumbents often struggle to get rid of. In terms of the competition with, say, the incumbents, right? I have a slightly different view, when it comes to the incumbents in Singapore. The incumbents in Singapore are not really the old school banks. They're actually pretty advanced in digital transformation, digital adoption. They tapping into my info database, digitalizing their client onboarding, their instant credit approvals, etc. So I see the competition being pretty tight here, and I also certainly hope that this healthy competition would bring along better banking experience for the customers here in Singapore. So that's with regards to the first point. With regards to the second point, on whether digital banks should buy, build, or what kind of model will be suitable. I think the questions that Debbie mentioned just now, they are very, very valid. To supplement that, there's only one point I want to add on this. Aside from looking into the scalability, configurability, where the data resides, the ongoing maintenance costs, etc. I think digital banks should also look into the implementation and the operationalization of the solution. It is often a big hurdle in the sense that not all the vendors might have the necessary implementation experience or banking experience to support and to see through the end-to-end implementation. So on our end, with Impulse, we have worked with different software vendors, be it core banking solution, facial recognition, eKYC, red reporting, etc. And there are several cases where the vendors just want to focus on developing the best solution, the best software. And we come in along with our banking and project management experience to support and to see through the implementation. So in short, I think when it comes to this kind of engagement model, whether to build, to buy, and if to buy, who should be the one doing the implementation? These are all the questions that digital banks will have to think about before venturing or entering into any of the conclusion or agreement.
Yes. Matthew, any views on build or buy?
Yeah, obviously I've got a very strong view on build or buy, but I'd like to get to that in a moment. If we can go back to the first part of the question was, which was, we've got traditional banking and we've got digital banking now. From my perspective in financial crime, what's the difference? So if I take two simple areas that Gian mentioned, the KYC CDD area and the transaction monitoring area. Okay, if you take a look at a traditional bank with KYC, what actually happens? You have a customer representative there, normally in the process somewhere. So there's either somebody in the branch, somebody in an office somewhere that has interaction with the customer. A lot of that in anybody's terms is the first line of defense. Okay, so that is the first line of defense, right? So when you're onboarding somebody or doing a KYC of a new client, what are you actually doing? You're collecting information, you're collecting documents for customer verification checks, you're putting it into some sort of onboarding process within the bank's core systems typically, and then you're passing that information to a solution like ours, for example, where a risk score will be generated based on the information that's been provided by the customer representative and the customer, of course, provided that information to him. That gets sent back, okay? then there's a lot of what we call toing and throwing between the two before you actually get to the point where the second line of defense, i.e. the compliance group, will say, okay, I need more information to do a deeper CDD or EDD check on this, or yeah, this guy's okay, you can bring, or this person or this organization's okay, you can bring them on board properly. Okay, at best, as I say, that's clunky, can take time, and is certainly not what the big buzzword is in digital is it's not frictionless. Okay, everything is about not having friction with your client in a digital world. Okay, got to make it as easy and to onboard as possible. The easier you can onboard somebody, I think the more customers you will get. So the less friction you have coming on board, the more good news about that particular process will go around, and you'll get more customers out. That's just my opinion. Okay, so if you look at a digital banking onboarding experience, you've got eKYC, you've got to have technologies to take all of that in. Okay, all those technologies are actually replacing what the customer representative would do. So you now have a situation where you have technology being the first line of defense. Okay, so that's a significantly different step change to how a traditional bank works. Once you've got all of that in there, of course, then you've got to have the approval, the scoring, the rating, and the approval all done, so that you still do have a second line of defense. And I'm sure Debbie could pass on more commentary about, what happened in the compliance groups or the second lines of defenses there. So I think it's there. I think digital banks need digital policies to manage all of that.
Yes.
And those policies are going to be different from a traditional bank.
Yes.
If I look at transaction monitoring, carry on.
Sorry, just on that point, we could come back to the transaction monitoring. You raised a really interesting point that I wanted to get the panel's views on, which was when you have a first line of defense, which is technology, and you have code or algorithms that basically take a major role in determining which clients you onboard and which transactions you allow to be processed. Where then, and you might have been moving on to it, Matthew, where then is the regulatory responsibility when something goes wrong? Can you blame the technology? I as a banker, I remember when something would go wrong, everyone would say, well, it was the team that processed transaction, or it was the RM, or it was the compliance. And that's an interesting question. And maybe Debbie, would you offer some thoughts on that, and then we'll come back to Matthew on the transaction monitoring.
Oh, thank you, Jeremy. You're right. I think all the virtual banks and also a lot of traditional banks are using artificial intelligence in various degrees. And it's so clear that we have very clear direction from regulators as well, which is also fair, that banks and human beings, the managers in charge, cannot shy away from taking the accountability and responsibilities. We need to understand the model, making sure there's reasonable explainability, what kind of variables are being used. When collecting data, we need to be very sure about making sure the ethical aspect and making sure the data are being used in a sensible manner, building proper and sound governance. So to Matt's comment, second line defense, especially for me, not from a tech background, I have to learn very quickly, but I'm very happy the colleagues around me are very willing to share about sometimes very simple questions, but I think I won't be shy to ask about those questions, because the more I ask them, the more they explain, and also read the reference materials, it really helps to expedite, and hopefully I can be provide quality second line defense service and function as well.
Yes, thank you. Thank you, Debbie. Matthew, sorry, if you wanted to continue your train of thought on transaction monitoring and build and buy, please continue. Yes,
Okay, so just go. You raised that question. If something goes wrong, who's the regulator going to blame? Okay, so in this situation, I mean, quite clearly, the regulator will expect the digital bank to know what its financial crime risks are, to to prove to them that they are managing those financial risks correctly, and to have governance evidence that they are doing so. Okay, and so if you have the right governance framework around, i.e., your rules, your machine learning models are all documented correctly and explainable, everything has to be explainable, then if something does go wrong, you can actually pull that governance documentation out, and you can actually prove to them, what you were doing. I mean, look, you're not going to catch everything that happens. Okay, you're going to miss some stuff.
Yes.
That's inevitable. The biggest banks in the world miss them, so I'm sure the digital banks will miss them as well. Okay,
Yes,
so that's it. Just very quickly going back to transaction monitoring. I mean, this is a whole different paradigm as well, because I mean, the reason people go to digital banks, what do they go there for? It's easy, it's quick, it's frictionless. That nice term there. Okay, so but there's a big push going on to what we call real-time fraud and real-time AML. Okay, where you will be able to stop a transaction if you think it's dodgy.
Mm-hmm.
Okay, so how do you do that in an environment that is supposed to be quick, easy, efficient? They don't expect to see something like that, a delay in that transaction going through.
Yes.
So that's an interesting thing. In an AML sense, in a traditional bank, what do? You get once a day, you get a batch file with millions of transactions in it. You run all your detection models against that batch file, and you come up with a number of alerts, and you investigate those alerts. We're going to have banks that have the ability to make decisions and investigate alerts going forward near enough in real time. Okay, so or maybe not real time, with very minimal delay, so that we still want to prevent the fraudsters and the money launderers, but there may, we're not going to have that sort of batch window, and 24 hours later we can have a look at the alerts and stuff like that. It's going to be much more real time going forward.
Yes. Thank you, Matthew. We actually have a poll, and I'm not sure if the technology will work, but we have a poll that I'd like to put to the audience at this point in time on this note of transaction monitoring, AML, and the solutions which are AI or machine learning based, I think, to which you were alluding. I think the poll is up. If the audience could please take a look and provide us with their thoughts, and we'll come back to this once the results are available.
Mm-hmm.
Thank you. That's technology, that's compliance. If we were to put ourselves in a dialogue with the regulator, do we think that regulators really understand what they are unleashing in terms of digital banks and the use of technology? Do we think that they are doing the right things and have done the right things? What would it be that you would ask of the regulator to be more supportive, perhaps, or to be more focused, particularly in relation to digital banks? Sheena, could I start with you?
Yeah, sure, Jamie. With regards to whether how involved regulators are, and how supportive they are, I think when it comes to the virtual banking concept, the regulators are also learning along the way. With the introduction of all these digital banking, virtual banking framework, along with that, in recent times they've introduced the circular on the customer protection on the use of PDAI. They've introduced the principles on how do you use it, and exactly how is banks gonna follow that? There's not really a very clear picture per se. I recall when the circular was introduced and we need to launch the facial recognition tool, and then at that point of time there was a debate about okay, so what is considered BDAI? Is this facial recognition the fact that it's rule-based? Do we consider it as BDAI or not? And then subsequently, we saw, I think, another publication released by regulator together with, if I'm not wrong, PwC, on a more comprehensive, drilling into BDAI, exactly how do you define it, etc. So I believe, they're learning along the way. And in terms of the supportiveness, if we look at, say, both Hong Kong MA and MAS, they've introduced their regulatory sandbox, the fintech sandbox, to really promote the use and the testing of these technologies. And on Singapore government side, there's the introduction of My Info initiative to encourage eKYC, etc. So I believe they're learning along the way, and they've made significant steps here. But at the same time, regulators being the police, they have to keep the risk contained, and they have to have that responsibility to maintain that financial stability. So I think it's really important moving ahead that banks or the incumbents as well as virtual banks working together with the regulators, and also to make sure that they're comfortable with the technology that's being introduced. And they are given the confidence that the technologies are being put into good use for the benefits of the consumers.
Great. Thanks, Sheena. Debbie, do you have a view? You've spoken to regulators while you worked at traditional banks. You've spoken to regulators, so now that you're at a digital bank, are they sufficiently flexible in terms of understanding the difference between the two, in your view?
Yeah, based on my experience, I have the experience to engage regulators in traditional banks and also here in a virtual bank. I can feel we have a lot of love and care from our regulators. Of course, when I'm under pressure trying to catch deadlines, sometimes I would say, oh, do they understand what we're doing? But actually, I think they know very well, and they have been working very hard, very diligent. I'm not sure if there's any regulator online. I'm not talking about this because they're here, but whenever I have questions, they are actually available even during weekend and late nights. Can you imagine? So I think, at different levels, they've been very responsive. I can feel they're trying to help us to succeed and to commence our business. We really feel thankful about them. If you look at the Hong Kong MA from an organization perspective, I can see they also have the confidence to be first movers within the region. And by issuing guidelines, by having sandbox, they also have different kinds of research and surveys to help participants understand what's going on in the market and the overall industry landscape. For example, they have Red Tech Watch to share with the industry and the public what's going on, what kind of interesting and exciting solutions there are, what have been tested in the market. And they've been also engaging the big four firms in looking, for example, there are papers on reshaping artificial intelligence in banking. And recently for the Hong Kong, there's also research with Hong Kong IMR on the use of Red Tech. And there's another survey going on Red Tech adoption in Hong Kong. So I do look forward to the results. And overall, I feel positive about the regulatory engagement and how well they know what they're doing.
Great. Thank you, Debbie. I'm afraid we are running out of time, or have run out of time, but the poll results are back, or at least I can see them. And this may be something that we would typically discuss maybe in the bar after the close of the conference. So we'll have to have our own virtual bar a little later. But the poll results are up, and the question was, what's the main challenge in development and use of AI or ML models in your AML function? The answer that attracted the most votes was lack of in-house skills to develop and manage AI ML models. So I'll leave that with the audience. I'll leave that with the panel. And just on that idea of a virtual bar, if we were heading off to the virtual bar, could I ask each of the panelists to tell me what would their drink be if they had a favorite drink to order at the bar tonight? Debbie.
It's too early for alcohols. I will have a lot of water.
A bit of water. Okay.